and gentlemen, the EV industry still has lots of growth potential. Stocks like Tesla, Ford, Nio, and GM are all trying to gain a share of the growing EV market. So in this video, I'll be ranking all of the most popular stocks in the EV industry, and I'll also be answering which stocks are the best investments in my opinion. Also, make sure to stick around to the end of the video because I have a few surprises in there as well. So let's get into it. The first stock in this ranking video is going to be the current kings of the market, Tesla. And Tesla is by far the biggest name in the EV market, and it is the largest car company in the world by market cap. Although Tesla has lost some of their market share, going from 79% in 2020 to 65% in 2021 of all EV sales, they are still in prime position to stay the best stock on this list. Why? Because Tesla makes a profit while most other stocks in the EV market don't. They had an EPS or earnings per share of $3.62 in 2022. And on top of that, Tesla is more than a car company. They're also into robotics, AI, batteries, solar panels, and more. With Elon Musk in charge, you can never write off Tesla stock. This is why I'm going to rank them S tier. I don't know if there's another stock on this list that can go head to head with Tesla right now. They are going to continue to innovate and to grow their company while also working towards a better future. Next up is going to be Nio, and like Tesla, Nio is a bigger name in the EV space compared to their competitors. However, they have more downsides than a stock like Tesla. For starters, Nio is a Chinese startup, which means there is always political risk involved when investing into the company. And Nio is also way smaller. They only delivered 40,000 vehicles in Q4 last year, while Tesla delivered 10 times that in the same quarter. But when you compare valuations between the company, Nio has the potential to be a value play. They traded a price to sales ratio of 1.8, while Tesla's trading at a PS ratio of 8.3. If you're bullish on Nio's long-term prospects, now might be a good time to buy this stock, because in my opinion, they're on a discount and they're at a nice multiple right now. So for these reasons, I'm going to put Nio in the B tier. Also, I'm so sorry, I just noticed you guys couldn't see Nio's logo, but I changed the background to black so you guys can see Nio is in the B tier. Anyways, I think Nio can be a great investment, but there is a lot of risk involved, especially unneeded political risk with China that I personally would rather avoid. It's time to talk about Ford stock. And Ford may not be the first name you think of when you picture an EV company, but they're number 2 in US sales for all electric vehicles, right behind Tesla. And this was because of the release of their Mustang Mach-E model, which was the 3rd best-selling EV in 2022. Now, investing in Ford is a little bit different than buying shares of new, shiny EV companies, because Ford is not a growth stock. Ford is over 100 years old, and their low price to sales ratio shows that it is. They have a PS ratio of 0.3, which is incredibly low for a stock in the EV market. Because of this, Ford doesn't offer investors the same potential returns as others on this list. However, investing in Ford stock isn't a bad thing. They have a 4.75% dividend yield, and they're way less volatile than competitors in the market. So depending on your investing goals, moderate growth for Ford plus a 4.75 dividend yield could convince you to buy this stock. And Ford becomes an even more interesting investment if they can continue growing their sales of their Mustang Mach-E. More sales, more revenue, more growth, plus a nice dividend, you can't go wrong. All of these reasons are why I'm ranking Ford in the A tier. Now, the returns won't be as high as other stocks on this list, but they are a stable company with dividends. Now, in my opinion, ranking GM is going to be somewhat similar to Ford, because like Ford, General Motors isn't a growth stock, but they are the 5th largest global manufacturer for cars in the world. And Warren Buffett has a stake in GM. I believe it's like 3.5%. Which is a good sign as well. Any company Buffett is bullish on, we should at least consider. Nevertheless, GM has noticed the increasing trend of EVs in the market, and they are working towards growing their segment of that business. In 2022, GM delivered 39,000 electric vehicles, which was a 57% year-over-year increase compared to 2021. GM has had lackluster returns over the last decade for investors, but they are investing heavily into electric vehicles because they know the potential it has. GM has the infrastructure in place to become a top dog in the EV space. I think it's a matter of time before they are. However, GM has had lackluster returns, as I said earlier, over the past decade, and I am a little bit more bullish on Ford, so I'm going to put them in the B tier. They still have loads of potential though, don't get me wrong. I've heard a lot of good things about their self-driving technology, so maybe that will propel them into the A tier when I remake this video next year. Who knows? We'll see what happens with GM. The 5th stock in this ranking video is going to be Li Auto. Li is interesting to me because they sell luxury electric SUVs, and their market is high-end consumers instead of the average customer in the EV space. Because of this, they make a lot more revenue per vehicle, and it was the main reason why their 2022 revenue growth was 68% higher than the previous year. Their trailing 12-month revenue is $55 billion, and they delivered 133,000 units in 2022. So they sound like a good investment. However, they also suffer from the same political risk as Nio. Since both companies are Chinese, we have to consider more downsides than other electric vehicle stocks. But overall, I'm bullish on Li Auto and where they're heading, and I'm going to place them in the A tier. Keep in mind that they have high risk, but the reward can be just as sweet for Li. Another luxury EV manufacturer on this list is Lucid Motors, and I won't lie, Lucid's cars are sexy, elegant, and they're sleek. I mean, I'm in love with the look of these cars, and they're pretty functional too. Their car, the Lucid Air, is the fastest charging car on the market right now as I'm recording this video. However, they only delivered 4,300 vehicles last year, blaming the supply chain and production issues for their poor performance. And Lucid also has a price to sales ratio of 16.4, which is the largest PS ratio in this video, and it might be a turn off for some investors. So in my opinion, Lucid does have a riskier investment proposition than their competitors because they had poor performance last year, they're trading at super high multiples, and they're owned by Saudi Arabia. However, they have gained 30% in share price in the first quarter of 2023, and they're capable of a big move to the upside. Taking all these things into consideration, I'm going to place Lucid in the C tier. Now this ranking might come back to bite me in the future, but compared to competitors in the space, I would take most other stocks over Lucid's. The next stock in this ranking video is going to be XPeng, and this is an interesting stock to talk about because they're another Chinese EV manufacturer. XPeng makes SUVs, sports sedans, and family sedans. They also delivered 120,000 vehicles last year, which was a 22% increase year over year, and they also grew their revenue by 22%. XPeng vehicles are targeted at, and I quote, tech-savvy middle-class consumers. In my opinion, XPeng might not be a bad stock to invest in, especially if you want to diversify your portfolio and get yourself some exposure into the EV market in China. There's still plenty of risks involved though, don't get me wrong. The biggest is the Chinese political risk, but all things considered, I'm going to place XPeng in the B category. Now, I've included ChargePoint in the EV rankings video because they are in the EV industry. But unlike every other stock on this list, they don't sell cars. ChargePoint, as implied in the name, is an EV car charging company. ChargePoint provides EV charging stations throughout the US and Europe, and they also sell hardware for home and commercial charging. And they generated solid revenue over the last 12 months, and they're up significantly from their 2021 share price levels. But the stock still represents a big risk since it's very new and untested. I mean, ChargePoint is the very definition of a risky growth stock, but the upside is definitely there. And for these reasons, I'm going to rank ChargePoint in the farthest B tier category. They have a lot of risk, but the upside is there as well, so I completely understand investing. For me personally, ChargePoint would be one of the last stock picks on this list because there's a lot of potential in the EV infrastructure market, but it's not for me. I'd rather invest in the cars themselves. So as y'all can see, here's the ranking. Tesla in S tier, Ford and Li Auto in A tier, GM, Nio, XPeng, and ChargePoint in B tier, and Lucid all alone in the C tier. Overall, as you guys can see, I only put one stock in the C tier category, and that's because I am very bullish on the EV market, and I wouldn't be surprised at all if all of these stocks hit. Anyways, this is going to be the end of today's video. If you've watched this far and you enjoyed it, please like and subscribe down below. I post shorts and videos every single day on the stock market, and I appreciate all of your support. Also, let me know down in the comment sections which EV stocks are you the most bullish on. Did I get any of these rankings wrong in your opinion? If you want to watch more of my content, another video of mine should be appearing on the screen right about now. My name is Dominic, and I'll see y'all next time. Peace.